Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Thursday, September 28th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we're diving deep into the intersections of law and crypto, whether it's Binance cutting ties with Russia, the SEC's ongoing tussle with Terraform Labs, or the courtroom drama unfolding around Sam Bankman-Fried. Legal battles are shaping the landscape. But that's not all. Central banks are toying with DeFi, while PayPal is making strategic crypto alliances. It's a jam-packed night tonight, folks. Let's get started. Binance sold its entire Russian business to Commex. This move comes as Binance faces mounting legal risks in Russia. Commex is a newly launched crypto exchange. It offers a wide range of products, including spot, futures, and P2P services. Binance's chief compliance officer, Noah Perlman, stated that operating in Russia is not compatible with Binance's compliance strategy. He said they're focusing their energy on the 100-plus other countries where they operate. Binance assured that all assets of existing Russian users are safe. The offboarding process may take up to a year. Binance will work with Commex to migrate its assets. Unlike other international deals in Russia, Binance will have no ongoing revenue split from the sale, nor does it maintain any option to buy back shares in the business. Last month, Binance removed 5 sanctioned Russian lenders from its site. The Wall Street Journal reported that Binance was helping Russians move money abroad. This came after U.S. Justice Department investigations into whether Binance had been used by Russians to evade U.S. sanctions. Binance CEO Changpeng Zhao took to Twitter to clarify some points. He said that Commex does not service U.S. or EU users. They have IP address checks and KYC blocks in place, which was something that Binance asked for in the deal. CZ also clarified that he holds no shares in Commex and didn't financially benefit from the deal. CZ also mentioned that some former Binance team members from the Commonwealth of the Independent States may transition to Commex. He thinks that's a good thing. The sale of Binance's Russian unit to Commex is a significant move. It speaks volumes about the regulatory landscape crypto businesses are navigating in. Binance's decision to exit Russia is a clear sign that the exchange is taking compliance seriously, especially in the face of U.S. sanctions and ongoing investigations. This could be seen as a strategic retreat to focus on markets where the regulatory environment is more favorable. CZ's denial of ownership in Commex is noteworthy. It dispels rumors and adds a layer of transparency to the deal. The fact that Commex will not service EU or US users is also significant. It shows that the new exchange is taking a cautious approach to compliance, likely to avoid the pitfalls that Binance itself encountered. The offboarding process for existing Russian users will take up to a year, which raises questions about the logistics and security of such a transition. That's a long window that could be exploited if not managed carefully. The absence of an ongoing revenue split or a buyback option in the deal indicates that Binance is cutting ties with Russia in a very final manner. This isn't a temporary measure, but a calculated exit. It's clear that Binance is tightening its compliance strategy. They're exiting a market fraught with legal risks to focus on more compliant operations. Even giants like Binance have to play by some rules, or at least know when to exit the game. Alright, you've just heard about Binance's tactical exit from Russia, a development that cannot be ignored. Compliance is the new battlefield, and it's reshaping the crypto world. But while Binance is navigating Russian law, let's pivot to US shores, where another legal battle is simmering. Make sure to hit that like button and subscribe to stay updated. This one's our cover story for tonight. The U.S. Securities Exchange Commission is gunning to question Terraform Labs founder Kwon. They want to talk to him in the U.S., and they want to talk about the catastrophic crash of Terra and Luna last year. But Kwon's legal team is pushing back hard. The SEC sued Terraform Labs back in February. They claimed the company misled investors about the safety of its Terra USD stablecoin. This stablecoin promised yields of up to 20%, which everybody should have known was unlikely at best. Because not only did they not get yields of up to 20%, both Terra and Luna crashed in May of 22, wiping out a staggering $50 billion in market value. And now the SEC wants to bring Kwon in for questioning before October 13th. But here's the twist. Kwon is currently detained in Montenegro. His lawyers argue that it's, quote, impossible to bring him to the U.S. They also say that providing written testimony would violate his due process rights under U.S. law. Kwon was detained in Montenegro in March of 2023. He was found guilty of using a fake Costa Rican passport to leave the country. He's serving a 4-month jail sentence. Now, both the U.S. and the Republic of Korea have requested his extradition. The SEC's case against Terraform Labs is far-reaching. They're accused of raising billions from investors through unregistered transactions. Terra USD was linked to the governance token Luna that was supposed to keep prices stable. Kwon's legal team indicated that a deposition could take place in Montenegro. They've also noted that a Montenegrin court may hold a hearing on October 13th or the 26th, where it would ask Kwon the SEC's questions. But the SEC may deem this process inadequate and pursue another deposition after the cutoff date. The SEC's aggressive stance against Terraform Labs and its founder raises questions about the agency's true motives. Is this a genuine pursuit of justice, or is it an attempt to cover up their relative inaction in the U.S. crypto regulatory space? They get to look like they're working really hard against the bad guys without doing much at all. The SEC's lawsuit against Terraform Labs also casts a shadow over algorithmic stablecoins. And frankly, the SEC isn't the only one. A number of jurisdictions have outright banned the algorithmic stables from their markets. The SEC is tightening its grip on crypto companies. But Kwon and Terraform Labs are not backing down. They're fighting to challenge the SEC's authority. Now buckle up, because as the SEC grapples with Kwon and Terraform Labs, another legal drama is unfolding in the crypto universe. And of course, we're talking about Sam Bankman-Fried and FTX. If you want to be the first to hear about these breaking stories, hit that notification bell now. Well, it's been a couple of days. Let's check in on the legal labyrinth surrounding Sam Bankman-Fried. The courtroom drama is thickening, and you won't believe the latest twists. Last week, the focus was on expert witnesses. This week, it's about what evidence and testimony can be presented. The defense team can now cross-examine cooperating witnesses, former FTX insiders, on issues like privileged company information and their recreational drug use. But they do have to notify the court beforehand. Now, let's talk about the prosecution. They can present evidence related to FTX's bankruptcy during the trial, despite objections from the defense. This opens the door to scrutinizing the FTT token and whether it was manipulated by other FTX insiders. Now, Bankman-Fried made another attempt to get out of jail, where he's been locked up since August. His bail was revoked when the judge ruled that he likely tampered with witnesses. His lawyers asked the court to let him stay at a temporary residence in the city with a security guard. They claim it's exceedingly difficult to prepare for the trial from jail. They said that the security guard will ensure that he doesn't have access to computers, cell phones, or the internet. Now, for my 2 cents, we're talking about New York City. He might just be safer in jail. None of that is relevant at this point. Judge Lewis Kaplan said that Sam will remain in jail for the duration of his trial. This decision comes despite multiple attempts by his legal team to secure his temporary release. The judge stated that Bankman-Fried had ample time to review his material before the trial. He will be made available to his attorneys at 7 a.m. Eastern Time every trial day. Now, his lawyers argued they would have no opportunity to confer with him at the end of a trial day. They even offered a strict set of limitations, including round-the-clock supervision and zero access to electronics. But the prosecutors weren't having it. They argued that Bankman-Fried and his lawyers had not met the burden of proof showing a temporary release was necessary. Now, witnesses may include FTX insiders like Gary Wang, Caroline Ellison, and Nishad Singh. The trial will start on October 3rd, pause on October 9th for a holiday, and then resume on October 10th. Sam did score a couple of wins. Judge Kaplan will permit SBF to use an air-gapped laptop for note-taking during his trial. The laptop will have no internet or local area connections, ensuring that Bankman-Fried cannot communicate with reporters or witnesses. Additionally, the judge ruled that he could wear suits instead of his prison uniform during court appearances. This could potentially mitigate bias from jurors who might otherwise perceive him as already guilty based on his attire. The allowance of an air-gapped laptop might seem trivial, but it's a nod to the importance of fair proceedings. It ensures that Bankman-Fried can actively participate in his defense, a crucial aspect often overlooked in the legal system, and is often the reason for overturn on appeal. The prosecutors want to make sure that any convictions stick. The decision to let him wear suits is kind of the same thing. It's about perception and the power dynamics at play in a courtroom setting. The permission to question DOJ witnesses about their recreational drug use could backfire on the defense. Now, it could expose potential biases or ulterior motives among the witnesses. That said, it risks diverting the trial's focus and could be seen as a desperate move by the defense. The ongoing battle for Bankman-Fried's release is the most telling part of this legal saga. The prosecution's resistance to his release reveals a deep-rooted distrust, likely fueled by the questionable actions Sam undertook while he was released on bail. So let's take stock. Bankman-Fried is fighting tooth and nail to stay out of prison. The prosecution is pulling no punches. And the judge, well, he's got a lot on his plate. This trial could be a watershed moment for the crypto industry, and you can bet we will be watching every move. From the courtroom to the central bank vaults, it's a wild ride tonight. And if you're fascinated by how centralized institutions are eyeballing DeFi, this next segment is for you. Don't forget to follow for daily insights. So, have you heard about the latest experiment that central banks are running with decentralized finance? Now, before you roll your eyes at the mention of central banks, this is a story you're going to want to hear. It's about how the very institutions we often criticize are now looking to DeFi to shape the future of money. The Bank for International Settlements is the central bank for central bankers. The BIS teamed up with the central banks of France, Singapore, and Switzerland. They conducted a test on cross-border trading of wholesale central bank digital currencies known as WCBDCs. The project, named Mariana, used hypothetical versions of the euro, Singapore dollar, and Swiss franc. These WCBDCs were traded between simulated financial institutions. The project relied on a common token standard on a public blockchain. This allowed for seamless exchange across different local payment and settlement systems. The project even used smart contracts to manage these WCBDCs. That's right, smart contracts. And smart contracts are what? A cornerstone of DeFi. Automated market makers, another DeFi concept, were also tested. Cecilia Skingsley, head of the BIS Innovation Hub, stated that these automated market makers could form the basis for a new generation of financial market infrastructures. So what does this mean for crypto? Well, first, it's an admission by central banks that DeFi technologies have potential. They're not just some fringe tech, but could be integral to the future of financial systems. Second, it's a sign that central banks are exploring ways to make cross-border payments more efficient. But let's not forget, this is still an experiment. The BIS and the central banks involved have made it clear that further research is needed. The BIS and the central banks are essentially acknowledging that power and the potential of DeFi technologies. While they're not outright endorsing DeFi, they're certainly not ignoring its capabilities. The crypto community has long touted DeFi as the future of finance. But let's not forget, these are central banks we're talking about. Their primary interest is maintaining control over financial systems, and the use of a public blockchain is a way to experiment without fully committing. Now, the fact that these tests were successful indicates a cautious but growing acceptance of decentralized technology. They're using DeFi technologies to potentially improve their centralized digital currencies. They're borrowing the tools of crypto to strengthen their own fork. While the BIS says further research is needed, we should be vigilant. The central banks might be seeing the utility in DeFi, but don't expect them to fully embrace the ethos of decentralization. They're more likely to take what they can find useful and incorporate it into their centralized systems. This is a classic case of if you can't beat them, join them, or more accurately, if you can't beat them, steal their tech. Project Mariana could go either way. It's both an endorsement of DeFi and a warning. Central banks are showing interest, but their involvement could alter the landscape in ways we might not fully endorse. From central banks experimenting with DeFi to PayPal aligning itself with Crypto.com, the lines between centralized finance and decentralized systems are blurring. Up next, we dissect this strategic alliance. But first, if you value financial freedom, make sure to share this episode. PayPal chose Crypto.com as its preferred platform for the US dollar-backed stablecoin PYUSD. This is a significant move, and here's why. PayPal launched PYUSD in August of 2023. It's a stablecoin pegged to the US dollar and built on the Ethereum blockchain. It's fully backed by US dollar deposits, short-term treasuries, and similar cash equivalents. Now, Crypto.com, a Singapore-based exchange, partnered with PayPal and Paxos to become the go-to platform for PYUSD. So, why is this a big deal? Crypto.com boasts the deepest liquidity for PYUSD trading pairs globally. This means that the exchange is well equipped to handle a large volume of PYUSD transactions, making it an ideal partner for PayPal. This partnership isn't just a one-off event. It builds on previous collaborations between PayPal and Crypto.com. For instance, you can already use PayPal to top up your Crypto.com Visa card. Joe Anzures, the Senior Vice President of Americas and Global Head of Payment Partnerships at Crypto.com, didn't mince words. He called Paxos, quote, a market-leading issuer of stablecoins and expressed excitement about the collaboration. He emphasized that connecting their 80 million users to the latest crypto innovations and supporting PayPal's global network will be pivotal in their mission to bring crypto to every wallet. PayPal has been expanding its presence in the crypto market. Earlier this month, they launched a crypto for USD conversion service. The PYUSD stablecoin is also available to PayPal users in the United States and has been listed on major exchanges like Bitstamp, Coinbase, and Kraken. It's even supported as a payment option by BitPay and MetaMask. The New York State Department of Financial Services has also greenlit PYUSD, which is really saying something. Now, here's my take on it. PayPal, a giant in the digital payment sector, choosing Crypto.com as its preferred exchange for PYUSD is a significant nod to the crypto world. It's a validation that mainstream financial entities can no longer ignore the crypto space. PayPal's PYUSD stablecoin being Ethereum-based is also noteworthy. It shows confidence in Ethereum's blockchain technology. Crypto.com's partnership with PayPal also deepens its foothold in the crypto market. The partnership could potentially bring in more users to the crypto ecosystem, given PayPal's massive global network. But let's not forget, with great power comes great scrutiny. As these partnerships grow, so will the eyes of regulators. And we all know how that relationship has been so far. In summary, Crypto.com's partnership with PayPal and Paxos is a significant milestone. It not only deepens the relationship between these entities, it paves the way for broader crypto adoption. Yet, as always, it's crucial to approach these developments with a critical eye. So, what happened? Binance exited Russia, selling its entire business to Commex. This move underscores Binance's renewed focus on compliance, especially given the intricate geopolitical backdrop involving U.S. sanctions. The sale is final, no buybacks, no revenue splits. The SEC is not letting up on Terraform Labs, pushing for the questioning of its founder Kwon, who is currently detained in Montenegro. The agency's pursuit raises questions about its motives and the global implications for crypto regulation. Sam Bankman-Fried's legal challenges continue to evolve. While the prosecution is not easing up, the defense is making some headway, gaining some allowances that could shape the trial's direction. Central banks are cautiously embracing DeFi technologies. The Bank for International Settlements, along with the central banks from France, Singapore, and Switzerland, conducted a successful experiment trading wholesale CBDCs using DeFi concepts. PayPal chose Crypto.com as its preferred platform for its new stablecoin PYUSD. While this is a significant nod to the crypto world, it also raises questions about the potential centralization of decentralized systems. Tonight's episode took a look at the complex interplay between centralized authorities and decentralized crypto. From Binance's strategic exit from Russia to the SEC's ongoing legal battles with Terraform Labs and Sam Bankman-Fried, we explored how these legal and strategic maneuvers are shaping the future of crypto. We also discussed how central banks are tentatively stepping into the DeFi space and what PayPal's partnership with Crypto.com means for the industry. So why should you care? Because these actions have immediate and long-term consequences. They will shape the regulatory environment, influence market stability, and determine how much room there is for innovation and financial freedom. As we wrap tonight, it's clear that we're at a pivotal moment. Will crypto continue to challenge traditional financial systems, or will it become another tool in the arsenal of centralized authorities? That remains to be seen, but one thing is certain. The crypto world is becoming increasingly interconnected with traditional financial systems, for better or worse. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.